Good morning, good afternoon, good evening, depending on where you're connecting from. And hopefully you can hear me loud and clear. Please drop a comment if you can hear me loud and clear. Drop a comment if you can hear me loud and clear. Are you set for today's business? Are you set for today's business? I would like to know in the comment section. If you don't have a plan for the day, you are not set for today's business. If by now you don't know what pair you're going to trade, you are not set for today's business. I would like to know which comments or which pairs, which instruments you're trading today. I would like to know in the comment section. If you have any question or any pair you want me to analyze, let me know in the comment section. Let me know if you can see my screen, you can hear me loud and clear. Let me know in the comment section. Good morning. Good morning, Mr. Uzoma. If you have any question or pair you want me to analyze, let me know in the comment section. Let me know in the comment section. I think that challenge should be at your end. That challenge should be at your end. Check your speaker. Others can hear me. Can you all hear me? Can you all hear me? Others can hear me. It's Chinere. I guess the issue is from your end. Please, can you all hear me? Can you all hear me? Can you all hear me? Others, I guess others can hear me. Please confirm you can hear me. Confirm you can hear me. others can hear me, so Ms. Shinre, please fix your mic. There is a buy opportunity. Let me just give you guys a signal this morning. If you want to trade Euro or C, there's a buy opportunity on Euro or C. Now the risk on Euro or C is high. If you are buying Euro or C, your stop loss needs to be at this point. Okay. So I'm currently just executed a buy trade on Euro or C. If you want to join me, you can also take the trade. Please set your stop loss. Ensure you apply proper money management. Ensure you apply proper money management. So your stop loss should be this low. Your stop loss should be this low, and your first take profit should be this point, and your second take profit should be at this point. Okay, your stop loss should be at this point. Initially, your stop loss should be here. If price breaks out from this high, you bring your stop loss to this relative equal low. I hope that is clear. So I took a buy on Euro Australian dollar. You can see our bias is bullish. Our bias is bullish. That's the reason for the buy. Okay. So let's go to Forex Factory. Let's go to Forex Factory to check the news that will be released today. Okay, today is 4th of March 2026, and we're expecting just two major news from Australia and the United States. Australia and United States. So Australia has released its GDP. That was released on 1:30 a.m. Nigerian time. 1:30 a.m. Nigerian time, and it was positive. It was positive. The forecast was 0.7%. The previous was 0.5%, and the actual is 0.8. So the actual is higher than the forecast. Is also higher than the previous. So that's positive for Australia. That's positive for Australia. And you can see when the news got released, if you check on Euro Australian dollar, you can see when the news got released this morning, you can see this sell here. This sell is as a result of the news. This sell is a result of the news. Okay? The result of the news. Then by 1:15 p.m., United States will be releasing its ADP non-farm employment change. And by 3 p.m., United States will be releasing ISM services PMI. So you should be very conservative if you're considering trading USD pairs. Like I told you yesterday, this week, I'm avoiding the USD pairs. I'm not interested in trading the USD pairs, and that's because of the several major news that will be released from the United States. And also the ongoing global crisis, okay? The ongoing global tension. So these are the reasons I'm avoiding the US dollar at the moment. Though dollar is bullish, dollar is still bullish, dollar is still bullish. Okay, so let's go to TradingView to see what we have on the dollar. Okay, let's start with the yen basket. What do we have on yen basket? You can see yesterday candle closed as an inverted hammer. You can see on yen, yesterday candle closed as an inverted hammer, and that inverted hammer formed at a discount area. You can see the inverted hammer forms a discount area. That should tell that yen is likely going to be bullish today. And you can see since the market opened, yen has been bullish. You can see yen has been bullish since the market opened. It's been bullish, and it's most likely yen will come and fill this gap. That is my expectation on yen. Okay, yen is likely going to come and fill this fair value gap. If it breaks out from this fair value gap, it will go for the liquidity residing at this relative equal highs. If it breaks out from this relative equal highs, then we should expect yen to come for this relative equal high. That's my expectation for the yen. So for today, I am bullish on the yen. I am bullish on the yen. Let's go to 4 hour. Okay, so it has created a fair value gap here. You can see what's playing out in the market. I think it has pulled back. You can see this fair value gap here. It has pulled back. You can see it has pulled back to fill that fair value gap. Okay, it has pulled back to fill this fair value gap. So if the current 4-hour candle closes as an hammer, if it closes as an hammer, then we should expect more buys. We should expect more buys. At this point, you can see we had a fair value gap here. Can you see? The market pulled back to fill that fair value gap. And after it filled that fair value gap, you can see this is an engulfing pattern, created a new fair value gap. Price pulled back to fill that fair value gap. We also had a resistance here. Price broke out from that resistance, and this could also be a break and retest. This could be a break and retest. So you should be bullish on the yen. Okay, bullish on the yen. Let's go to 1 hour, 15 minutes. Should be able to identify a shift in market structure on 15 minutes or 1 hour time frame. So you can see on 1 hour, we had a sweep of liquidity at this point, and there was a shift in market structure. You can see there was a shift in market structure at this point. And after a shift in market structure, we want to see price pull back to a discount. Let's see if it actually pulled back to a discount from this point. You can see that price pulled back to a discount area. Can you see it's below? It pulled back to a discount area which is below equilibrium, 0.50 Fibonacci level. You can see. So it's pulled back to a discount area before going bullish. And I think it's still bullish. I hope that is clear. So that is my take on the yen. I am bullish on the yen for today's market. Okay, let's go to dollar index. Let's see dollar index. If you have any question or pair you want me to analyze, let me know in the comment section. So we'll start by looking at the daily time frame. So daily yesterday, you can see what played out on the daily time frame. Or let me go to the weekly and see what's happening. Okay, so yesterday they swept the liquidity that was residing at this relative equal high. They swept the liquidity residing at this relative equal high. Then let's see how. Okay, so this was yesterday candle. Looks like a shooting star. Looks like a shooting star. Now, if today's candle closes bearish, then we'll expect more sales on dollar tomorrow. Okay, we'll expect more sales on dollar tomorrow. But you can see this high it has created here. If you go down to 4 hour, there's a bearish reversal pattern. You can see we had a bearish reversal pattern on a 4 hour time frame, indicating that dollar is bearish at the moment. So dollar might want to come and fill this gap here, which is at a discount. Okay, if we apply a Fibonacci from this swing low to this swing high, so dollar might want to pull back to going bullish before it continues with its bullish trend. Okay, but if price breaks down, it has traded on 4 hour. If price breaks out, a 4 hour candle closes above this resistance, you should expect more buys. So it's either price pulls back to a discount or price breaks out from this resistance for more buys. I hope that is clear. I hope that is clear. So if you look at the structure we have on the daily time frame, you can see the structure we have here is a bullish structure, right? You can see that it's a bullish structure. We had a low here, we had high, created a low, high, created a low, and created a new high. So it's a bullish structure. So every sell will be a reversal, okay, to a discount area. That's what I see on the dollar. Okay, so I'm still bullish on the dollar. Okay, I'm still very bullish on the dollar. I hope that is clear. I hope that is clear. Okay, so now let's go see currency pairs. Currency pairs. Let's start with GBP USD. So GBP/USD, let's start with the daily. So yesterday candle, you can see it closed as an hammer. It closed as an hammer. This is a bearish hammer. And after the close of a bearish hammer, you have to wait for the next candle to close bullish. You have to wait for the next candle to close bullish before you buy. Okay, you have to wait for the next candle. So if today's candle closes bullish, you should expect more buys on GBP/USD. If today's candle, now as you can see, GBP/USD has been bearish. For those of you that have the Forex scanner, for those of you that have this Forex scanner, I told you yesterday that you should not sell dollar because it's generated the sell signal at this point. Okay, so it has already moved. This is not the right time to sell. This is not the right time to sell. You can see bearish. You can see the bias is bearish, and this bias was generated at this point. So if you had sold from this point, you would have made over 220 pips, over 220 pips. So this is not the right time. Remember, I told you if the market has done over 100 pips in one direction, don't take that trade. Don't take that trade. As you can see now, price is at a discount area. Price is at a discount area. So this is not the right time to sell. You have missed this move. Okay. So if you want to join the sell, wait for a reversal to a premium area before you sell. Okay, before you sell. Okay. So for GBP/USD, I'm still bearish on GBP/USD, but I would love to see price pull back. Let's be from this swing high to this swing low. I'd love to see GBP/USD pull back to a premium area before, and at this premium area, you can see we have our entry level 1, entry level 2. This is your entry level 1, this is your entry level 2. This is where you should be looking for your sells. Okay, this is where you should look for sales. Wait for price to pull back to this zone before you sell. I hope that is clear. That's my take on GBP/USD. Same thing on EUR/USD. EUR/USD has been bearish for some days now. This is not the right time to sell. As far as I'm concerned, EUR/USD is oversold. Okay, so you can see this bearish signal we had here. This was generated at this point. So this is where you should have sold. So let's calculate the number of pips it delivered from this point. So you can see over 260 pips. Over 260 pips. So you shouldn't be selling EUR/USD. If you want to take any risk on EUR/USD today, it will be a buy. But that buy has to be a short buy. That buy has to be a short buy, please. It has to be a short buy because you will be trading against the higher time frame trend. Okay. If you want to take a buy, ensure that you apply proper risk and money management. You should be conservative because you're trading against the higher time frame trend. Because if you look at what we had on 4 hour, you can see this doji that formed here. This doji, the low of this doji has become a level of liquidity. The low of this doji candle, and you can see the bullish momentum is still very weak. The bullish momentum is still very weak. You can see that it's still very weak. And like I said, this candle here, the most retail traders would have executed by last night after the formation of this doji and this bullish candle. And where would they have their stop loss? Their stop losses will be residing at this low. So there's a high probability they are coming for this low. There's a high probability they are coming to sweep their liquidity residing at this low. That's what I see playing out on EUR/USD. Okay, it's still going to sell. If you want to buy it, be very conservative. Be very conservative. The bullish momentum is still very weak. It's still very weak. Okay, let me see 1 hour. Okay, so if you want to sell, if you want to join the sell, you can wait for price to pull back into this zone. Okay, wait for price to pull back this zone. Once price pulls back into this zone and the bearish reversal pattern form, you can risk selling. You can risk selling if price pulls back into this zone and a bearish reversal pattern forms. You can join the bearish trend on EUR/USD. Okay, then let's look at which other pair do you want me to analyze? Which other pair do you want me to analyze? Let me know in the comment section. Are you all still here? Can you hear me? Okay, then Gold, gold, gold played out as I predicted yesterday. I told you gold is going to a discount area. I said it yesterday. I don't buy gold from the current market price. Okay, yeah. Yesterday we had this candle. I said, don't buy gold. Okay, that gold is likely going to retrace back to a discount area. And I did apply the Fibonacci from this swing low to this swing high. And I said, wait for gold to pull back to a discount area. I identified two levels. This level, yeah, you can see this level. I identified this level yesterday. And I also identified one. Yeah, I said, you should look for your buys. Yeah, I think it was this fair value gap I identified. And I said, wait for price to pull back to this fair value gap or this fair value gap. And that has played out. That has played out. So gold is bullish at the moment. Gold is bullish at the moment. Gold is still coming for this high. Gold is still coming for this high. So the next draw on liquidity right now is this. It's that's Monday high. Yeah, the high of Monday candle is the next draw on liquidity. And if price breaks out from this high, it's going for this high. Okay, so if you want to buy gold, know the risk. You can see the risk is high. The risk is very high. If you want to buy gold, your risk, your stop loss has to be at this point, which is about 1,700 and close to 100,790 pips. That is where you set your stop loss. If that risk is too high for you, don't trade gold. If that risk, if your account cannot accommodate the risk, don't trade gold. Don't trade gold. Now, if you are setting your stop loss at 1,789 pips and your first TP is 2,500, that risk reward is worth it. That risk reward is worth it. At the moment, you should not be using 50 pips, 60 pips as stop loss on gold. Don't try that. Your stop loss will be used as liquidity. Don't use 30, 40, 50 pips as stop loss on gold. It's better not to use stop loss than to use those 30, 50 pips. You will be taken out. You will be taken out. And if you are trading gold and you are not using stop loss, the probability that you're going to blow that account is 90%, or let me say 95%. 95%. If you don't use stop loss on gold, if you don't use stop loss on gold, the probability that you're going to blow that account is 95%. 95%. Okay, so that's my take on gold. Gold is still bullish. Gold is still coming for this high, and it's coming for this high. This is about 4,000 plus pips. That's my take on gold. Which other pair do you want me to analyze? Let me know. Please give the video a thumbs up if you haven't done that. Give the video a thumbs up if you haven't done that. And if it's your first time joining the live stream, do subscribe to the channel so that anytime I come on live, you get notified by YouTube. What other pair do you want me to analyze? Let me know. Okay, let's look at GJ, Euro Aussie and GJ. Good morning, Ebuka. Let's see Euro Aussie. Okay, Euro Aussie, my bias for Euro Aussie is bullish. My bias for Euro Aussie is bullish. You can see it has given us a buy signal. Okay, it's a buy signal. This is where you should have entered the buy. After the formation of this bullish candle, that would have been the right time to buy. So if you have missed this move, it has given you opportunity. I think it has pulled back to a discount area now. You can see. So it's giving you another opportunity to join the trend. It has pulled back to a discount area, giving you an opportunity to join the trend. Okay, so it's a buy. It's a buy. It's a buy. So it has pulled back to, you can see, it has pulled back. We had this fair value gap here. Can you see this fair value gap? It's created here. Price has pulled back into that fair value gap. And look at the pattern that formed inside that fair value gap. After it fit the fair value gap, we had a doji candle. We had a doji candle. So if the current 1 hour candle closes bullish, that will be a strong confirmation to buy. Okay. If the current, and you can see the buyers here, is bullish, don't trade against the buyers. Don't trade against the buyers. The buyers is what? Bullish. So look for buys. Okay. look for buy. So if the current 1 hour closes bullish, you could buy Euro Aussie. Now, if you are buying Euro Aussie, your stop loss should be this low. This is about 90 pips. That is where you should set your stop loss. Buy at this point, you would have made 113 pips. You risk, say, 90 pips. At this point, 114 pips. So if price breaks out from this resistance or this high, you can adjust your stop loss. You can bring your stop loss from this point, adjust it to this point. So your risk will reduce from 90 that it was, it will reduce to just maybe 40 pips. Okay, it will reduce to 40 pips. So initially, your stop loss should be as low. Okay, and if price pulls back, breaks out from this high, and clears this, then you adjust your stop loss. A few minutes, please. So that's my take on Euro. So lastly, we'll look at GJ. Let's look at GJ before we end this session. If you have any question, let me know. So like I said, yen is bullish. If yen is bullish, you are looking for sales on GJ. If yen is bullish, you should look for sales on GJ. So what's been happening on GJ today? Let's start with the daily time frame. Let's start with the daily time frame. On GJ, you can see how yesterday candle closed. And you see how yesterday candle closed? What pattern is this? This is an hanging man. This is an hanging man, and an hanging man indicates change in trend from bullish to bearish. Monday was strongly bullish, yesterday was bearish, and at the close of the market, the candle closed as an hanging man, indicating change in trend from bullish to bearish. You can see that. So this tells you that GJ is likely going to be bearish today. Okay, so yesterday, after the close of yesterday candle, a resistance level was created. Okay, this is a resistance. So as much the market is trading below this resistance, the sellers are still in control. The bears are still in control. You would only, if price breaks out from this resistance, that is when you would consider buying. Okay, but at the moment, the sellers are still in control. Okay, the sellers are still in control, so you should look for sell. So GJ is likely the first target on GJ will be this low, and if it breaks out from this low, GJ might come for the liquidity residing at this low. Okay, might come for the liquidity residing at this low. So if you want to sell GJ, your stop loss has to be at this point. This is about 120 pips. Your first tip will be this low. Okay, this is about 120 pips. So you wait from this low. Once price breaks out from this low, you adjust your stop loss to the high of this candle. Let's go to 4 hour. Your stop loss should be at this point. Okay. Then when price breaks out from this low, you adjust your stop loss to this high. You take it, you bring it down from this point, you bring it to this point. That is if price breaks out from this low. That will be a strong confirmation that the bears have overpowered the sellers. Okay, you can see this area here is a key support at the moment. You can see it. Resistance turn support, resistance turn support, resistance turn support. Okay, so your initial stop loss should be here. If price breaks out from this, see this key support level, this resistance turn support level. If price breaks out, a candle closes below it, then you have stop loss to this high. I hope that is clear. Do you have any other question? Yes. Let me know. Let me know. For those of you who are interested in getting this ultimate software, if you're interested, send me a message on WhatsApp. If you are still blowing your account, you need to get this. If it's your desire to end 2026 in profits, you should be tired of blowing your funds in this market. We designed this software. You are the reason we designed this software. Stop blowing your eye. Trade the right way. Trade the right way. So if you're interested, months is $20, is $50, 6 months is $80, and yearly you pay just $130. Just $130. Now, if you want to access this scanner for free, all you have to do is to fund your Aurum trading account with $1,000. If you want to have access to this software for free, fund your trading account with $1,000. $1,000, and you would have access to this software. And at the end of the month, you should trade a minimum of 3 standard lots. Okay, you have to trade a minimum of 3 standard lots for you to be able to access the software, to use the software the next month. So you fund your trading account with $1,000, you trade with a minimum of 3 standard lots for you to be able to access the software the next month. Okay, you can't afford $1,000, you subscribe to the software. You subscribe. Any question? Any question? Any question? You should get your license now that it is cheap and affordable. Get your license now that it's cheap and affordable. By next week, we might increase the price, okay, by $10. For every of the plan, by $10, we're increasing the price by next week. So get it now that it's very cheap. The price will keep increasing because the demand is increasing. Demand is increasing. Now, when demand is increasing, price would go up. The price will definitely go up. It won't remain the same. So get it now. Get it now. Any question? Any question? Any question? Any question? We've also updated the software. We've updated the software. You can see at the moment there is no buy or sell signal on Euro USD, GBP USD. Okay, you can see there is no signal here. You can see it's still scanning. It's still scanning to see there's a signal. There's no setup now. Okay, once there's a setup to buy or sell on any of this currency there, a message will be sent to your phone. A message, you will receive a notification on your mobile app, MT4. You'll receive a message, an alert, a signal. The signal will come with stop loss and your entry price. Stop loss and entry price to be sent to your mobile phone. So you don't have to sit down all day watching the charts. You don't have to sit down all day watching the charts. Okay, a message, you will receive a message on your phone. So while you are at work, you can still execute the trade. You can execute the trade. Okay, so we've made everything, so easy, so simple, so that you make money consistently in this market. Any question? Any question? Any question? Any question? Any question? For those of you are currently using the software, when you renew your subscription, you get access to the updated version. You will have access to the updated version. Once you renew your software, when you are renewing your software, you get access to this updated version. You are not paying extra fee. Okay. So that will be all for today's session. If there are no questions, Mr. Uzoma, thank you for joining. Mrs. Chire, thank you for joining. Ebuka, thanks for joining. I want to believe you got value from this session. I wish you all a profitable trading day. Bye for now.